Hello and welcome to my morning note. Let's take a trip to the frontier. When it's hard to make money in the developed markets or even in the conventional emerging markets such as the BRICS, then perhaps it makes sense to really take a plunge into the frontier markets. Very much more widely understood than they were. They have their own indices and it does become that much more possible for investors to head beyond the emerging markets and across the frontier. But exactly how well is it working at the moment? With me now to discuss this is our capital markets correspondent, Robin Wigglesworth. Robin, thanks for coming on. Let's start out by taking a look at MSCI's gauge of frontier market equities. And that doesn't look particularly healthy. What's going on?
Well, I mean, the Frontier Markets Index is heavily skewed towards the Gulf states.
Yeah, more than half. Right?
Yes. No, it's especially in Kuwait is a big weighting. It's a legacy of the time when Kuwait was the oldest and the biggest stock market in the Arab world. Kuwait was given a large weighting, which arguably it doesn't deserve anymore. Kuwait has had its idiosyncratic problems, but the entire Gulf region is really disappointed, really. It's heavily skewed towards financials, real estate, none of which have done fantastically well. There has been a bit of a rebound. Obviously, a few political worries have weighed on a few exchanges. But overall, frontier markets have been treading water. They typically don't really catch fire until 3 months after emerging markets have had a sustained rally as people move into sort of the riskier, more recondite niches.
So they're still driven by that liquidity from international investors rather than by any local factors.
It's the trickle down from developed markets, emerging markets and frontier markets are the last to benefit from any rally.
But maybe they're extremely levered to such a thing when it happens.
Well, they are generally quite decorrelated on both sides. I mean, clearly they cannot shake off the fact that a lot of investors in frontier markets are also international investors. If they have redemptions, you know, this is where they sell first off. Frontier markets were hammered in 2008 and 2009, and since then they've been basically treading water. But they have recently managed to decorrelate. There are indigenous investor bases here. So that could be a positive in the next few years.
Okay, let's take a look at the debt markets. And here there's rather a different picture. What we see in the last year would appear to be very great added optimism about the chances of these countries actually repaying and avoiding default. What's going on here? If
we've gone back to 08, 09, you would have seen that go up to 20–30%. And this is the next gem index. It's the frontier markets. We don't really call them that in the fixed income world, but this is the closest thing. There's lots of African names, Belize, Bosnia, countries like that. Here we can see clearly, because of all the money gushing into fixed income globally, and a lot of that going into emerging markets. So the mainstream emerging markets, like I mentioned, the returns aren't that great anymore. It's been very much going into some more exotic names like Ghana, the Gabons.
How carefully are people actually assessing credit risk here, or are they simply saying, I need to get some yield from somewhere, I'll give it a go?
That is the concern. I mean, Ivory Coast, when that country went into default after its mini civil war, there was very little reaction in the rest of African credit, which was good. It shows that investors are differentiating. However, clearly, when they are so desperate for something that yields more than US Treasuries, there are some credits that probably are getting looked on more favourably than the fundamentals would imply, really. I mean, a lot of these countries are still politically shaky.
Now, how much is the investment industry trying to push people in this direction? We hear lots of, obviously, the BRIC phenomenon has come and perhaps now gone. Is there any great attempt to persuade people into these markets at the moment?
Well, there certainly is. I mean, I think this has been sort of a drumbeat for some time, ever since 06, 07, and it's growing more loudly now, again, after being quite quiet for some time. Everybody wants to look for the next big thing. You want to be the person that, you know, was Mr. Africa, let's say, when the African century finally starts after all these false dawns. So it probably has some way to go in the fixed income market. Equities might take some time before that, and we see that take off.
Okay, Robin, thank you very much indeed. Plainly, there are opportunities beyond the frontier. Perhaps the best thing to do, rather than to trust to indices, is to find people who really understand individual markets and limit risk by really understanding what you're doing when you go there.